The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to a beautiful April 23rd at the headquarters of Technical Trading and Investing, TFNN.com. It is just a wonderful day out here. And what else are we going to be doing? We're going to be talking about the flash crash yet again. It's one of those days where you just, feels like Groundhog Day all over again. But first we go to the news, which is of history, which I start off most of my shows with. And today, according to tradition, was the birthday of William Shakespeare. He was thought to be born on this day on April 23rd. He was known to have died on April 26th. I think he was 53 or 54 years old. But he was, I guess, the first real playwright. And before then, I guess we were pretty much telling stories one-to-one. He was the first to really open up a theater and have real productions. The term limelight comes from him wanting to do his shows at night and figuring out that he could burn lime in little bowls in front of the actors so everybody could see in the darkened theater. But not a bad deal. He was born, they think, pretty close to the date, April 23rd, 1564. But I digress. Anyway, we've got a market here that's been moving and shaking and grooving, and a little bit of market gas out here today. So what are we really talking about? We have a huge move up, pretty much caused by some words out of some ECB officials. Basically, we had some news that was just so horrible that showed that the recession is just so massive that they don't think that the ECB cannot take further stimulative action next week, and that pushed the European markets up fairly extensively. I suspect over the next few days we're going to start seeing the dollar index really start to move above that $84 level, and that's when we're probably going to break. We're up 28 cents at $83.11 on the dollar index. We were talking a little bit about the flash crash. Of course, I actually had, it was very early on, maybe, I think I hadn't been on TFNN more than about 15 days before the flash crash occurred. And we had a little bit of that today. Computers are now actually even hooked up, not just the data on the market itself, but it's hooked up to news feeds. One of those news feeds is the Associated Press. We had a hacker get in and basically put in a phony news article about the White House being attacked and 2 bomb explosions and the president's hurt. Whatever, we're up on the Dow at the moment, 120, 130 points or whatever it is. That pretty much went to red in the space of a minute and a half, and soon it was denied pretty much all the way back up. So we continue to see kind of a market that is a little bit flaky out here. We saw yesterday Google. Today we're seeing, was that Friday? I think it was Google was yesterday, wasn't it? Where it traded down $25 in a matter of a minute and a half and came back. We've got a market out here that is ripe and thin. Very light volume going back up to these highs. Volume's a little bit better today, 2.4 billion shares as we speak at 1577 on the S&P cash. But up 15 points. Again, we were up yesterday on very light volume. Need a lot more. This is even less volume than the last time we were up here in these areas. But we're seeing kind of a tale of two markets. One, a Netflix market where we have an amazing amount of shorts on a particular stock. A lot of people are saying, well, that was it, plus the earnings this morning. For a minute, I don't believe any of that. I think it has to do all with the easy money policies of Europe and the belief that they'll throw more and more money at Europe until it's fixed. My guess is that the austerity plan will stick next week, and we're probably going to see the dollar when we talk again next Tuesday in the $85 to $86 range. Once that breaks, the market will snap, and like baby, baby will fall. I don't know that thing. And the cradle will bust and the baby will fall. Yeah, it's been a long time since I've remembered that little ditty out there. But is interesting. Anyway, we had Netflix up fairly high. I want to get into that a little bit today and some other news stories. Probably did I do anything? ARMS Holdings was up. I called in, or actually I am Tom yesterday, that we'd see a lot of action and know a little bit more about this market, was what it was going to do when ARMS Holdings reported. ARMH is the symbol for it. It's ARMS Holdings. They are a design-only company. They design processors that are used in a lot of the smartphones and tablets, and they only do the design. Then they sell that design to somebody like Apple, who actually has another company like Taiwan Semiconductor actually build the chip for them to their specifications. I had to laugh when I was reading the rollout this morning, why Intel is talking about 14 and 12 nanometer, and in 3 to 4 years, 7 nanometer chips. ARMS Holdings was jumping up and down about their 38 nanometer technology. I was thinking, if you want something ultra cheap, certainly ARMS Holding is an easy way to do that. If you're wanting something that gets a super extended battery life, the only way to do that is really shrink the size of it. ARMS Holdings is working with a new technology in transistors, and they're kind of pushing that for lower processing power. In fact, a lot of the new devices, if you look at it, it'll be basically CPU cycles per watt of power and heat, and they're rating it that way now. So these big data farms, like Amazon's data and other companies that sell huge data systems, are pretty big on actually just selling that kind of a low-power technology, because right now some of the biggest expenses in these server farms is air conditioning, just to keep everything cooled down. If they start off with something that puts off less heat, then they save money all the years that particular CPU and motherboard and hard drive is running. Anyway, as we look at it, there's a little bit of movement in some other peripheral issues out here. We've got gold down almost $10, and what was it? Crude. Where's my crude? To $80 to $8.76. Yeah, it was down a little bit, a little more than the North Atlantic crude, but it's very interesting. So anyway, ARMS Holdings came out. Sales rose by 29% year over year. The stock had kind of been in a downtrend after the CEO had stated that he was retiring, and I suspect that he's retiring somewhere at the top. Intel is coming after them, and I think we'll do quite well against them because of their better manufacturing. ARMS Holdings doesn't control any of the manufacturing, and when it gets right down to it, it's going to be who can build on the smallest diameter or die size, and that'll be it. But I think they're getting the little bounce out of here. They'll continue to do well, so I'm not going to short them. But I have a feeling that their days of being the easiest and cheapest solution for people making smartphones is probably drawing to an end. If you can get these processors to vastly use less power, or instead of charging your phone daily, we might see phones in the next year that can go up to 3-4 days of time before you're actually recharging them, especially when people use a lot of text applications, games, that kind of stuff. So it's going to be interesting. They did do well. That is a good omen, at least a little bit, for Apple out here. Last time I checked, Apple was at 405. Yeah, 405.19, up $6. It is above the 396 level, which was the 1-to-1 ABC down on that one. But it is well below the 435 level, which was a support. So probably the best you could look at this is in a range right now from 396 to 435. If we get good news, I suspect we have sellers come right back in at 435 again. But, we're up 1.5% on Apple out here. Volume is fairly light, 12 million shares for a day before, the day before earnings. Apple always reports at 4:30 after the bell has their analyst conference at 5:15. So normally we don't get everything out of Apple we want to for about another 45 minutes after the first liners come out. I suspect with the barrage of news articles saying that Apple is just going to disappoint, it's the end of the world, and the stock being up, I have a feeling that we'll probably have a tail of a lot of shorts probably covering right before earnings coming out here. I don't expect a lot differently than what we already know. And basically the news out of China would confirm what we already know about Apple, and that is there's probably not a lot unknown. The big question will be, what are they going to do in the future? My guess is that they'll never get back to those kind of 65% margins they saw on the iPhone 3. They're not going to get, probably, I'm wondering if they'll actually even start talking about it today, where they have lost enough of a competitive advantage that they will not get the premium that they once deserved. They're selling their phones right now, the latest top-of-the-line phone, for almost $700. The top-of-the-line Samsung phone that some people think is even better than theirs is being sold to the carriers for about $480, $485. It's going to be very tough for Apple to continue to say that they're going to get almost $700 out of their phone. And I would suspect that we're probably going to see more and more vendors, AT&T, Verizon, pushing Samsungs and other phones out there and basically just shutting up about Apple until Apple actually starts bringing that down. But the thought is that they're never going to get those kind of margins. They're not going to get the back-end deal that they used to get, and it's going to really hurt them in the future. We've already seen some of that already. The question is just how bad does it get before it bottoms? Are they a Samsung that's more than willing to live with 15 or 18% margins? And if we took Apple and actually put that on Apple, how much would they actually be selling for? It would be down probably in the $280 range. Anyway, we'll be back in just a few minutes.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we came back, we had some news out today. Of course, there's a big week of news and earnings out here. PMI came out this morning. Headline: index fell from 52 to last month's reading of 54.9. They were looking for 53.9. Like I said, it really didn't matter once the news came out that at least one of the ECB officials said he was going to make it rain money. That's what he said. He was going to make it rain down on in here with money. It didn't really matter. The market kind of had a slow start, but started to push higher. We're at 1575. I suspect a little of this is the ramp up on earnings. A lot of people think since Netflix popped up so high, all the rest of these stocks are going to also. So we've had a lot of movement in stocks, a little bit on fairly thin volume, push a lot of the bigger stocks fairly strongly. But I think it's just a little bit more of the death rattle before we head back down the other side. Again, if they keep on throwing the money around in Europe, the dollar will move up and our stock market will pull back. So not much to really figure out in there. I think you just need to sit on your hands quietly and let your hand play out here. But we'll have to see. Anyway, other things going on in the marketplace today, if you missed, finally we will have some questions answered about MF Global's Chapter 11 bankruptcy. John Corsine has been sued along with all the other major officers of the defunct company. Now that enough time has gone by, Louis Freeh went ahead and filed his lawsuit on behalf of the trustee of the bankruptcy of MF Global. It's going to be fairly interesting. Louis Freeh, of course, used to run the FBI. He wasn't a great FBI guy, but he kind of was a great investigator, and I suspect we're probably going to see a fairly huge investigation of him. And, of course, now that most of the legal peril he's been under has gone away, we're probably going to have to get some honest answers from him that I'll guarantee he will not want to answer. And he will not be able to also say that he can't answer. He will be compelled to answer by the judge. And my guess is that if it really comes to it, they will give him at least criminal immunity for anything he did, forcing him to spill his guts. And when that happens, it's going to be very interesting because we already know from some of the things that the CFO said that John Corzine plainly knew what he was doing and told him to do it. And I guess that puts a little blood on the CFO's hands, but we probably know that he's guilty as sin, but we will finally know about it if Louis Freeh is not part of this big whitewash over MF Global. You know, when you're a big muckety-muck, big guy on the street, you became the governor of New Jersey, then you moved to another big almost mob town in Chicago. You know a lot of people. You know where to grease the skids, and he at least got out of the criminal indictments that probably should have been filed against him. But I suspect we're probably going to find out exactly how all this money ended up over in England, who said what and when, and there's not going to be a lot of places for these guys to hide. I don't know. Of course, he sent out a spokesman saying that everybody's just Monday morning quarterbacking this. I don't think if you took your entire nest egg, put it in the stock market, and bought way out of the money puts or calls on Apple, I think you would have known that there's a high probability that you're going to lose all of your money. And he's been around long enough. He's not a dumb guy. He made an entirely huge bet, and when it started going south, knew that they were going to lose all their money. And the question is, why did he, at the last few minutes, decide to start shipping this money overseas to cover his bad bets at the expense of depositors in his company here? And I think the answer is fairly clear. He was buying political cover. Anyway, just one thought. It's pretty much for the news. Kind of a light day out here, actually, on the news side of things. But we are going to go. Did I just? I need to get that back up just so I can see my charts. We're going to start looking at some things. Let's take a look at Apple and see if we can draw anything there. Someone was asking about whether or not we could actually take a bet on Apple. We'll do that when we come back after the break.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Baby, let me be your love teddy bear. Put a chain around my neck and leave me anywhere. Let me be, oh, let him be your old teddy bear. I don't want to be your tiger.
And we've got a phone call, so we're going to go right to it, and that's Martin in Oklahoma. How you doing today, Martin?
Well, my name's David. How are you doing
okay,
today,
Dave? Pretty good. You're in Oklahoma?
Yes. I wanted to look at Raytheon.
At least you got half of it right. Go ahead.
I wanted to look at Raytheon. I got out of my short last week. They've got earnings coming up Thursday. They always seem to surprise on earnings, but I didn't want to go long yet.
Okay, and what's the symbol on that?
RTN.
Okay, with an N is in Nancy.
Yes.
Okay. Good enough. Raytheon, RTN.
They're coming back.
And what else we have? Yeah, I'm looking at it right now here. Our call screener put RTM as in Mary in there, so I was looking at something else. Now that I'm looking at RTN, you've got, this thing's just kind of basically in a big consolidation pattern from $58 down to $53. What were you thinking? It was going to break out or something?
Well, I was in it short because last week, and I got out of my shorts but I didn't want to go back long. They got earnings on Thursday. Like I said, it seemed to always surprise on earnings, but I'm kind of leery. They're coming back up on ice. It looks like a triple top.
Well, the biggest problem I'd have with Raytheon is that they are going to be affected by the sequester to some extent, and they're pretty much stuck in this trading range. So you're basically looking at a $5 trading range in this stock. You don't have a real good signal that, one, it's going to break out of the top or that it's going to break out of the bottom. So, I think you could almost say that at $54 you'd be covering your shorts and going long, and at $59 you'd be shorting it and selling any long. So, this thing's just bouncing around. I can't really get a good feel for it. You've got good volume down, good volume up. This last little thing looks more like an ABC back down to retest this low at about 53 or 54. But I don't think you're probably going to get any kind of surprise on earnings, and this thing's probably going to be, my guess is going to be between 56 and 57. I just don't think that you get this. This doesn't look like it's got a lot in it one way or the other. They'd really, like you said, would have to come out with something really radical. And I don't think that there's anything I know. 80% of their business is the U.S. government and other governments. I just don't see anything of a surprise coming out of that.
Okay. I know they've never been able to get back in that top range that they hit.
Yeah, if you had light volume again at $59, you could short it, and if it had light volume back down around 53, 52.50, you could go long this thing. It's just in a big consolidation pattern here in that range. So, if you're going to play the range game, you could with that stock. And it doesn't have a lot in here that interests me particularly.
Okay, because that's what I've been doing. I've been shorting it, but like I said, with earnings coming out, I was afraid to go long on it.
Okay. Well, I appreciate it very much, and thanks for the phone call. You can always give me a call at 877-927-6648 also, and we'll see some other stuff. Anyway, we were talking about other stocks out here, ARMS Holdings today. We had Xerox out with earnings. A lot of these stocks did not have real big movements. We had kind of a spike down today in Xerox, but for the most part, it's where it's been the last couple of days. Not a lot in it. So probably the stocks that interested me the most that had earnings out were companies like Waters last night, where we had a huge spike not long after the open out here that got back up into the gap area that's been a fairly significant resistance. We're back and probably given half the pop back out here in the 92 area right now. But that's not the only stock that I've seen that has done that. There have been some others out here. Citigroup, CIT was out. It, of course, is blown through this little gap that was out here. So far, a lighter volume, but the gap actually occurred on January 29th. It hopped up on 6 million shares, gone back and closed that gap today, but it looks to me like it's going to hold that lower level probably into the close. It's just above 40 right now. Coach was out, one of the ones that everybody's talking about, giving the potential for a lot of these stocks that got hammered last earnings season to come back, and it did get hammered last earnings on the 23rd. They came out and warned, I believe they warned back then, down on monstrous volume of 51 million shares. We're back into that with 17 million shares. So far, a little better news, but at this point, just filling the gap. DAL, of course, you can almost look at this more like an oil company than an airline anymore, since all their profits really come from the oil side. If you took and back out their purchase of oil conglomerate, you probably wouldn't have a lot. Not a lot of volume, certainly a big candle out here, and it's filling its gap day down from the 2nd of April out here. But, again, not enough volume to really make me think a lot. We had a couple others. Brinker International symbol is EAT. It was off a little bit. This thing really looks to me like another one of the false breakouts like IBM. IBM, of course, really got hammered, but a lot of these stocks are looking like they are breaking to much higher levels out here without the associated volume, and on earnings are coming back into the longer trading range. When we look at IBM, I've been warning about that forever, that it wasn't participating on higher highs. Of course, it fell apart on earnings, still back down in that 190, low 190 areas, and just a huge volume. You've got to bet that there's two lower lows out here. Both of them, I suspect, are going to get tested. The first one is the 184.78 low of November 15th of last year, and then there's one at 181.85 from the July 12th lows. So we've got a lot of wind up here, and with this huge movement, just like we saw in gold, it's not uncommon to get a little respite, a little bounce out of there. You get these huge moves down with massive amounts of volume. You get a lot of people that think, hey, it's got to be cheap here, so I'll go ahead and step in. You get a little set up, and then you go back and retest those high-volume lows. But we got enough and high enough volume back into that 184.78 candle, but I would say that we've got an 80-85% chance of actually getting those lower lows still tested before IBM settles out. Other things I wanted to look at out here. IDX, was that one? Yes, this one popped down fairly large volume today. IDEX Laboratories almost got back out here, and I suspect with the volume we saw today, we will get back to the two previous lows from last year, the May 21st low at $81.91. We also have a low at $81.31. So in that $81 area, we got to a low of $83.05 and kind of rallied back a great deal here. A lot of volume. People just can't stand a stock that's down. They have to throw some money at it, just like IBM, some of these others. But I think we've got a good chance that we are setting up for an ABC down in the marketplace. And as we do that, we will be finding whether or not that volume comes back in. I suspect that a lot of this is option rollover related. I'm seeing a lot of options movement in the marketplace that makes me think that we are setting up for a move. That's probably going to be down to the 1475 level on the S&P cash. We'll probably have our first real major bounce out of this downturn in the marketplace. The idea that the Fed and the EU zone leaders will be able to save us from everything, I think, is highly overrated. China is now such a huge part of the international business arena that if they're catching a cold, they will give us pneumonia. And the numbers for China continue to be just horrific. We saw big sell-offs in that Asian-Pacific rim. Only the reason we saw the huge movement in the European zone is just because they are now believing that they will once again come and throw a lot more money at them. We've got. I wanted to get to some of the stocks besides Apple reporting after the bell tonight. Earnings PM, maybe, and there's a ton of them. We talked about Apple. Wanted to look at Broadcom, BRCM. This thing has been, of course, making narrower and narrower trading range. Broadcom, of course, the competitor to Qualcomm, has been kind of losing out in a lot of these arenas, but it is, of course, got pretty much the upside to 35s if it really had some decent blowout earnings. It's got enough volume in the last few days at these lows that it probably on a failure would go back to about $30. It looks to me like this thing wants to go to the November 16th low at $29.95, and we do have considerably higher volume in the last two lows than we have on the last two highs. That continues to make me think that the path of least resistance is still going to be lower in this stock for a while. Other things that we have out after the bell, Juniper Networks, of course, these got hammered and have been on a long trip down. It really looks to me like Juniper Networks wants to come back and test this gap where this thing took off, which was on the 25th of, June last year. Popped up with 21.5 million shares. that gap has acted as support numerous times. But what we did have is this thing tried to go through the previous highs that were around the $22 level. It actually got up to $22.98, closed back below, and has been selling off with higher volume, or at least equal volume of the last major leg up. So this doesn't look like it's washed out completely either. I'm going to say this thing on bad news goes to 15.5. On good news, you might be able to see that it fills this big gap, trading gap down, and that gap happened on the 19th of March out here. It was a volume of 16, almost 17 million shares. So a decent down day, but it's still a fairly noticeable gap up to about $20.20, something like that. It's going to probably end up having a little doji down here today, but I suspect that we have an untested low out here at this 1401 from July 17th last year. It has not gotten back and retested that. Not at an enormously high volume low, but it makes me think that we're probably going to at least get back into that $14 range before this thing finally settles out, consolidates, and maybe is ready for yet another run out here. ETH is after the bell again tonight. That is Ethan Allen, of course, highly dependent on new home sales. People buy new homes. They want to go out and put brand new furniture in it. This thing, not a lot of clues out here. If I was going to pick one, to me it would look more like a possible ABC down with the high out here today setting up as the C point and move back down to fill this gap at about $26. So it'll be very interesting to see what these guys report. Cree out after the bell again tonight. This thing has been kind of interesting with a nice little volume pop today. It is gapped above on higher volume and really pushing itself into earnings tonight. This is the kind of stock that you need to really watch closely. If it disappoints, it's going to be down at $44 before the close of after-hour trading and maybe lower. Very vulnerable. When we look at the power law vector indicator numbers I have on this, you had almost 40% higher energy from the first leg from $43 up to $55.66 than you did from the $48.40 level up to this high today at 58. So not a lot of energy in this last leg. Very vulnerable out there. If it comes out with some good numbers, you may have a little upside to it. This is one where you probably would look to see if the numbers come out poorly, this thing is probably going to come back and fill all of that gap, or at least part of it, in the $46 area. So I think, somebody in the den asked me how ARMS Holding had a great earnings. How does this reflect on Apple? Did answer a little earlier. And it is, I said Z did. ARMS Holdings, of course, is a proxy, and it is a, what can I say? They are what they are. They sell processors to all these companies. What you don't know is exactly who's buying them. Is it, is it Samsung buying their design, or is it Apple? Normally they comment about it. I actually read through their output. We'll be back in just a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, we're kind of previewing some of these stocks that might have some big movements after the hour. One of the ones that I think is interesting is Panera. It broke out, really didn't have a big sign of strength. When it did, the volume was okay. But I'm going to say that this thing kind of looks more like IBM than any of the stocks I've seen out here. I would suspect that on a bad number, this thing's coming right back under $170. On a good number, just have to see how good it was, but it is at highs. That we've kind of pulled back a little bit here off the highs of about 5 days ago, 185.67. I suspect it would have to be very good to get past, let's say, 190. So, you've got about maybe $15 down and $10 up on this company. Last I checked, not a lot of shorts in Panera, so it's not the next Netflix where you're going to make 25% overnight. And I suspect that Netflix has set up a lot of the market to believe that everybody's just going to blow out. Stocks are just going to rocket on up. But I think we're probably getting back to the meat of earnings and had maybe a day or two. We still have 20% of the S&P already reporting. Of those stocks, half of them have not been able to meet the revenue numbers. And I don't think that is going to change anytime soon. Most of the comments from these major manufacturer companies like CAT have not been positive, even though the market is reacting positive to rather bleak outlooks, at least for the next 6 months. So interesting, but we will keep an eye on that. And I wanted to look at this S&P with 1575. We went to a high of 1579.58 on the S&P cash. I suspect this would be the point that we are going to decide whether or not this market is doing an ABC down or one more test of the top. So I think tomorrow by afternoon we're going to see this probably back down below 1555 or making its way to go back and retest the highs once more. That we have 2.7 billion shares is not a rousing endorsement as we push back up. But more and more we look at it, it looks like the April-May high of 2010, and it will be interesting. I wanted to look at some other stocks that are coming out after the bell, and one of them is going to be Yum. I don't think a lot of people are expecting a lot out of this. They continue to have a lot of problems in China, and it looks to me, if the news is not very good, you've got a high probability of it coming back and testing the 59.68, which is a pretty high volume low out here. And at that point, if the volume, and maybe some consolidation, maybe this thing would be a buy back down around here. On the positive end, there's a nice little gap up to $68. So, not probably enough meat on the bone for a trade like that. TRMK, which is Trustmark Corporation, had a little bounce out here today. Again, another one out after the bell tonight. The last major high out here had okay volume, 340,000 shares on March 28. But my guess is this is another one that looks like it's headed back down to test the last major low and a gap in the $21 range. Trying to think of anything else. I wanted to check in with IBM, or not with IBM, but with Apple one last time before we close the show out to get a good read on that. 404, what is that? 405.44, up on 13.5 million shares pre-earnings. IBM's up, on 5 million shares today, up $3. Not too bad, but it'll be very interesting to watch these roll through. But don't have just a real good read on them right now. I think I'll sit back and wait for the results tomorrow. See y'all later.